Okay. Whoops, that one. Makes my screen do screwy stuff here, so bear with me. All right, I think we're live. Now let me get back to the call. That almost looks right. Let me see. All right. Hey, we're working. Hi, guys. Welcome back. I'm going to do this every week. Were we looking at Thursdays from now on, or does that work better for you? I kind of want to be
I mean, it
respectful.
doesn't matter. Just this was a crazy week. So, but normally it doesn't really matter to me.
Okay. I mean, we can make it regular on Thursdays if you prefer. I just want to respect your schedule because I know you're a pretty busy
Yeah,
guy.
no, I mean that should be fine.
Cool. All right. Well, let's lay right into it. Old Jimbo was speaking about the S&P here, and I got SPY on here, and you'll see a bunch of dope on my chart, man. My chart for SPY is just nasty. We used to coin the phrase "chart nasty" to kind of take after Vicky Barbalack, trailer nasty. We got chart nasty. Um, Looking at this stuff, I have all kinds of little liquidity zones that I mark out, and I get these little boxes here. And you can see this previous high is where we're at now. We're testing that for support. We have really clean 2-for-1 measured move up. I'm not going to draw the boxes on it because my chart's already messy enough, but you can see primary accumulation, secondary accumulation, final move. We broke down from that. We've retested. This is split here. This is 2 separate moves. Came back 50% retracement, went back to almost the top, and then we had kind of a breakdown where we broke support and melted down. So around here is where things get interesting because this is a previous high. It is a very key pivot area. And I think we've got a good chance of bouncing here, but we also have a fairly good chance of maybe melting down to the bottom of the zone one more time and maybe even pushing lower to these guys. But I'll have to play it by ear. We like to say trade the chart in front of you. Another thing we like to say is it's not what you trade, it's how you trade it. Very important things to remember. But Jim was kind of saying, we're kind of asking the question, can we hold this? Can we hold this? Well, we can. And in all likelihood, we've been trading the retracements this morning from one zone to the next. I've been doing a lot of teaching, a lot of math with this morning. And yesterday was a day of pretty good brilliance for shorting. And the day before, that was a great teachable moment because it made a perfect retracement and a breakover and just ripped down. Good stuff. So going into tighter and tighter time frames, we got this infamous look here, and everybody knows this pattern. If you don't know this pattern, you probably are pretty new at trading, or maybe you've at least heard of it once, the inverse head and shoulders. And once you've got a base of a big old bear trend, that's your left shoulder. There's your head. There's your right shoulder. If we break this zone, this is the neckline, we can be bulls. We can go and retrace probably at least to this area here, somewhere in the middle of this consolidation is expected. But I always map these out in zones because we find liquidity in these zones. We find an imbalance that changes direction here. And we're right up against a key resistance zone, and that's just mapped off. The 2-hour chart would show a wick a little higher here, but this zone here is going to be interesting. If we can break out of this, sure, we can be bulls for a little while. We can catch some rebound. Yesterday's V-bottom, pretty clean trades. Now, we've scalped this stuff in the morning. We're going to sit and wait and see what happens with this zone. It might take the rest of the day for this to work out. It might not even do anything till tomorrow, but we will see something. Moving on, I know Jimbo had the top 10 list out this morning, and he mentioned one that I've traded before, but I'm not a huge fan of trading. And I might want to kind of catch your input on this one first. Micron.
Yeah, I mean, I've traded it before too. Not a huge fan of trading it. I mean, you look at the daily chart and it's all over the place. Maybe, if it kicked down into the 200-day and found some support, it'd be interesting for me to buy. I don't know that I'd be shorting it at the moment. The place to short would have been, a couple of days ago, not right now.
Right.
So yeah, just not a look I like at the moment.
I mean, it was interesting back here when we had the end of prospected end of the bear market. It started making some channel swings. Those were righteous to trade, and I enjoyed the hell out of that. But you're right. It's just kind of not as interesting as it should be for anybody to trade. This is a really old analyst target here. This has probably been on my chart since this thing was down in here around around this time last year. But I'm kind of looking at things with just a simplistic approach. I've got this descending channel, and that kind of met pretty close to where the mean of this channel is, or 50% retracement, whatever you want to call it, or half back. I've heard it called many things. But I had a key target here, and I went long on this break, took profit, went long again. That's where my trade ended, right between here and here. I missed this whole big old breakout, and I'm okay with that. But then I started marking it again. Another descending channel, well, return to mean. One more long, had it. Now we're consolidating into a giant wedge, and this is a weekly chart, mind you. So I'm kind of looking at it the same way you are. I'd be interested if it hit that 200. Cool, we could take another hop. That's also looking a bit bearish. So if it doesn't channel here, yeah, it may not hold that interest anymore. But I like to look at the 2-hour chart too. I love the scalp stuff. So we have a nice measured move down. So like an overnight swing or a quick scalp would suggest that we'd probably come back. And maybe if we break this halfway point, about half of this move here, we can get long and hit this guy here up at 68 before rejecting. Maybe. I'm not interested in trading that because this is pretty choppy, very hard to trade. But if I were to just kind of look at it with simplicity, it's got a chance. But I'd love to see if it holds this support. And certainly this morning it wicked right through that quite a bit. Found some buyers, but I almost kind of wonder if it's going to ever get back to that high again. So, yeah, down the road we'll see some interest in it, but I'm with you. I'm not going to really mess with this until I start to see it hit an interesting area. So, what did Jimbo say about it? Said terrible.
Yeah,
negative.
I mean, I think he was bullish, but I mean, not like pounding the table, buy.
Right. Yeah, I'm kind of grabbing that. And the end of his little explanation, he says Micron had been expected to have a weak quarter and a good forecast. The opposite happened. So he's basically being the newscaster and telling you what happened. He's not making any predictions on this one. But yeah, slightly bullish. But he's kind of maybe in the same boat we are. He's like, let's see if it holds support around there first.
Or I think when it's Jim, it's I have no idea and I don't want to get my butt kicked saying
Again,
the wrong thing.
right? No, he's really kind of calmed down with that a little bit. I've noticed he's kind of humbled himself somewhat, and maybe.
Well, I mean, he knows people are watching him, so
Right.
I think and if you watch Mad Money every night, which unfortunately I do, I mean, he does punt on more things than I think he has in the past.
Just realizing how off-center my camera was, or me. Yeah, I'm with you. He's not as punchy as he used to be, and he's like acting as if people are actually watching him.
Which they are.
That's for sure. He's got plenty of followers. So
He's got people like you and me too. So
yeah, and that's the thing. Like I kind of tell everybody I know, like don't take advice from any kind of analyst, including myself. But I like to be the teacher in this. I like to show people how to do their own analysis more than anything. Because of that simple statement, it's not what you trade, it's how you trade it. But whenever you get somebody with a lot of following speaking about a stock, Jim Cramer, it brings attention to it, which brings volatility to it, which brings opportunity to trade it. And that's why we even care. So anytime he opens his mouth about something or prints his target or calls out an analyst target or whatever the hell he says, I go with, hey, let's see if it's interesting and go look at the chart like we do everything we see here. If it's a good short, we'll short it. If it's a good long, we'll long it. If it's just a scalp, cool, we'll scalp it too. Anything that moves, man, it's all fair game. But making it move is the key. So whenever they flap their gums about something. We're on it. Um, the darling Apple. Let me see if I can get into this a little bit. Hold on. He's of course, it's one of their club favorites. They love talking about it. Oh, yeah. The Apple 15 phone. I mean, there's been some people throwing shade at the wow, they got the USB-C finally, and they're not even utilizing the full capability of USB-C. What's going on with that? I mean, Apple. You know, I'm an Android guy, so I have a slight bias to Apple products. But you know, everything I've seen Android phones, particularly Samsung, come out with, usually Apple will go and kind of not steal the design, but they'll build on it. So you know, you get USB-C that comes out, and then they finally fall in line and get, take away from their specialized Apple chargers and go with that. But that's not even the primary charging anyway. So they like to do their wireless charging, if I'm not mistaken. I'm not an Apple guy, so I don't know, but you know,
Yeah, the way I always look at Apple, I mean, I don't care about the products. It's
right,
such a big part of the S&P and the Nasdaq, and and fully invested portfolio managers use it as a cash substitute. So, I mean, given where it is right now, I wouldn't be looking to short it. Again, it's what, 4 points away from the 200-day moving average. So
right.
I'd maybe be looking at that spot and go long.
I agree. I'm looking at a nice clean down. We got 1.5 move here, and we found liquidity on the daily. Today we got a nice big hammer candle out of it. We could see a good long setup. I'd like to see it come back and get above. If you looked at my giant measured move setup here, looking at the 2 hour, I'm going to watch this area of interest here around 171 to 172. If it can spike through that, cool. We can get some good bull moves out of it and retrace most of this stuff. But yeah, I'm with you. I don't care enough about the products to really care about the company fundamentally. But yeah, it does make a great cash substitute when it's bullish. And
Well, no, I mean, not for us,
not
but
for
if
us.
you're if you're a portfolio manager that has to be fully invested, you figure you're not going to wake up one morning and find Apple down 20%.
Right. Good point. And when it's bullish, yeah, it's beating inflation. Whoops, I just dragged my drawing around. Keep forgetting to lock those. All right, so yeah, I'd say it's gonna get interesting sooner or later here, but yeah, I'm with you. I'm gonna wait and see what happens with maybe if it bounces off of the 200, or if it even gets there, or if it just starts to chew back through some of these retracements, and certainly
Right.
the
I mean,
172.
Cramer likes to say on Apple, own it, don't trade it. I say the opposite: trade it, don't own it.
I'm with you. Yeah, I'd rather trade it than own it any day. Most traders can't bear to hold shares of Apple for longer than they have to. But in the history of the company, I mean, they're doing something right. They've been around for a long time making money, but leadership change and all the happy stuff going with it. The other thing I wanted to point out, and I'm dragging it to my daily chart, but this is that big old rising channel that appears on the weekly chart that I have here, and it's just a big old expansion, and it roots down here, which is silly. But the white line here, something I like to call the natural trend line. And if you treat it as a regression line for like a rising channel, it also acts as a key area. So like here we have, base of channel to the regression line, test, come back to the 200, breach it, run like the dickens to the top end. Now we've come through, this becomes our center line for this big price action here. So if we can hold here, and that regression line certainly lines right up with the 200 period, we'll start to see some interest in it. But unless it can, in the short term break above 172, I'm going to kind of sit on my hands and wait for that. Seems to be a logical thing to do. And, we didn't see Jim pound the table on this one either. So it's just more of a, we'll wait and see. Moving on. He got to talking about Meta, of course, which is like the other stock they love to mess with. I've been off and on with Meta here. You can see I've done some trading on it. I traded this move. I mapped this move out. I wasn't very enthusiastic about it. I traded probably the second half of it up to the analyst target here. That was about it for me. Now I'm looking at it like, what the heck's going on here? Well, they've since upgraded their target up here to 335 and some change. And I plotted the extra move up here. These are stinking rare in price action. I'm thinking this is going to consolidate for a little while in this range, and that's why I've got a whole bunch of pivots kind of lined out from here.
Yeah, I mean, to me, this one looks like it's getting ready for something. I mean, yesterday they tried to kill it. You know, that was an amazing. I don't know if you were watching it intraday, but that was an amazing move yesterday.
Yeah, no kidding.
And you know, all the moving averages are all stuck together. It looks like it wants to go somewhere.
It seems like a big old liquidity grab. So, like, yeah, they tried to kill it, and whoever did the killing was probably on the other side of this trade picking up shares.
Probably.
So it gives them a good low average. They're in low average of this range. And this is a big old consolidation point. So I think it'll walk around in these pivots for a little while and eventually either break out or break down. You know, it's one that's often talked about. It's always in the news. And, you know, you look at Zuckerberg and the way he runs things, he tries to maintain an edge of being, you know, onto stuff. But
I think he lost that edge with Threads, but
yeah, it's almost like looking at ADHD. He sees a squirrel, turns his head. So it's kind of interesting to watch how that company operates for sure. But like you look at the chart and it just tells you, well, let's wait and see. This is kind of a, it's not a bummer. It's not a jump up and down and buy the crap out of it, but somebody sure as heck did. So we'll wait and see what happens with this. And I drew a couple of lines here, and I got this little slope here, which is kind of an interesting chart design that I draw, and this is one of my patterns I pick up on. Descending wedges are always keen, and then we did break above that, even though we wicked well below that thing yesterday. The body kind of held right on that line when that candle closed. So now we're looking at, can it break out and start retracing? Well, this is my go no go zone, and I just map liquidity from wherever there was an imbalance. The wicks are caused by rapid order changes. You know, limit orders change hands, but there's always an imbalance that makes them happen. If we can break above this zone, I might be interested in a quick bull trade up to, you know, about 312 or so. Maybe to retrace that. This happens to be in the middle of a 1-for-1 down move for me. So like this is our retracement target in the first place, and it certainly nailed that today. Kind of looking at beyond today, it's got to break this zone to be bullish. And if it rejects here, it's going to go much back down to support pretty quickly. So certainly keep it on your radar, but don't go jumping in anything that you don't want to regret later, as far as my advice goes. If you wanted to do just a quick, you know, measure on this thing, it has already made a expected move to the top in two ways. You got the liquidity area up here, which is 50% of the previous trend, obviously the big trend. 30-minute chart, you got a really nice move that equals this move if you ignore the wick. So you got this block here, accumulation overnight, block here. Usually these tend to pull back, so I'm thinking we're probably going to see more of a pullback today, and we'll test some support. And then from here, if we can hold this pivot area, cool, we can be bulls. But I'm going to be skeptical first. Definitely has lots of price action. It's just like we say, every time Zuck goes squirrel, you know, it's going to get chased. Anyway, another one he was talking about. Oh, where was it? There it is. This old dead horse that everybody keeps talking about. And man, I'm so sick of looking at this stupid stock, but they just don't shut up about it. GameStop.
oh man,
I'm sure you don't even touch that one. I wouldn't either.
not very often. And I'm glad I didn't today. I mean, I didn't realize it It retraced that entire move.
Yeah. And a lot of people are going to see this as accumulation and possible setup for a bull move. But man, walks like a duck, talks like a duck. That looks more like a bear flag to me for the short term.
Well, I mean, it was up. It opened up massive, and
Right.
the open was 8 cents away from the high, and now it's. And, I mean, it's not far from the lows.
Right.
Yeah, there you go.
They scalped it. Who knows who they are. What was it? They were mentioning a CEO change or something like that to
Yeah,
cause
yeah,
this?
yeah.
Yeah.
Ryan Cohen, I think, came in as CEO.
And then boom, we get this massive money chasing that pre-market. And you got to realize in the pre-market, your liquidity mostly comes from other traders. So, if you go chase this higher and higher and higher, I don't necessarily have the heart to tell you, but the hopium and dreamium that is being smoked in this whole move is really not a good drug. And every
Nope.
time it pops up like that, there'll be some smart traders ready to short it. I didn't mess with it this morning. I didn't catch the news on it, so I just didn't pay any attention to it. Like I said, I'm sick of hearing about this stock. I feel bad for all the people who just chased it, and probably there's still some people holding bags up here at $1.10, dude. That's just that hurts my heart to think about that. That's why I really despise the stock. But you know, it's just kind of such as life kind of moment. It's not what you trade; it's how you trade it. And though I did scalp some of this move, I went and sold some credit spreads at the top and did very well on that massive pullback on that whole thing. But I haven't really messed with it since that whole onset. So other than that, now we're looking at possibly some support here to maybe come back and make a mean retracement to like $20 again. But man, it's just one of those stocks I love to hate. I just don't like to trade it anymore.
Yeah, no,
Yeah.
neither do I. I mean, you got to be careful shorting it. I mean, it's put people out of business, and obviously, you look at what happened today. This thing can retrace pretty quickly.
Yeah, that is a heck of a move. And I was kind of joking around with my folks this morning. I said, unless some rumor comes out that says Microsoft is going to buy it, and even then, that's highly unlikely. I don't see any real future in this company, and the chart
Right.
certainly follows suit. It's broken a critical support zone. This just to me looks like Bitcoin while it melted down slowly until it ate everybody up, and then maybe it'll bounce. But that's not a bottom yet, in my opinion. All right, getting on to the other club darling here, and there's two of them attached now. Uh, we got Lulu and Peloton. Um, I'd love to hear your input on those. Those are two companies that I'll trade, but I do not invest in.
Yeah, I mean, Lulu looks like a short right here to me.
Agreed. That's just split right down to 50, and we got this whole move to retrace. Yeah, like a
Yeah, I
three.
mean, Peloton, I mean, maybe. It was on my watch list this morning to possibly short it. I didn't do anything because the market was all over the place in the morning. I mean, that's I could see it kind of moving up to the 6.5 area. I mean, I wouldn't be shorting it right now. I'm not buying it either, but looks kind of tempting. I mean, it was up a lot more. I was looking to short it. Now it's somewhat
Yeah,
reasonable, but I just figure, who. I think my daughter has a Peloton, but besides her, she's the only one I know.
right. I gave it the nickname, and I'm kind of mean sometimes. I called it Pellet Trash for a while.
Yeah.
um, Back in this thing, and gosh, man, I had probably the short of my life on this thing. I just kept repeat shorting this thing the whole move down, and then I picked up the second half of it all the way down here. When it crossed the red line, I was taking very light trades on it from that point. Um, but I simply looked left on the monthly chart and just saw that even though this is a monthly or weekly bar here, let me pull up the monthly. It makes more sense on the monthly. If I'm going to talk about the monthly, I should probably also show it.
Yeah.
So all of these points from the monthly chart, what I did is I just printed lines on all these control areas, and these are just, big moves. And anytime you have something that goes up like this is your perfect picture of market structure. You get all the hype fluffs it up, and then capitalization takes root, and then disbelief and all that happy stuff. You get all the stages in there. Nonetheless, though, I would just trade from one pivot to the next, and it's just mark the top, mark the bottom, trade from one to the other. This whole month was just psycho, repeat, short, 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 short. It'd pop up and make a little bear flag peak and then break over repeatedly. And it was just over and over and over again. I almost got tired of shorting it, but then I looked at my portfolio and I said, hey, you know what? Never get mad when somebody slaps you in the face with a stack of bills.
Yeah, exactly. I never get tired of shorting something if it's going down.
Yes, sir. So running it past that red line, and that red line was just the bottom of the base. I looked at the mean here of its inception and its takeoff point, and I realized, hey, if it breaks below this, I'm not going to see much momentum, and I certainly didn't for a while. So I just said, hey, this was a great short. Why get greedy and continue to go full size into this thing? No, didn't do it. So now I've looked at this thing and looked at this consolidation, and for a little while, about a month ago, I was like, maybe we can be bulls around here. I was looking at this, and these are typical 3-bars, or someone calls it a Busby. I know I like to call it an evening star, or a 3-bar. And if you don't get the fourth bar where it matches the height of the third bar, typically you can call this a continuation pattern in a bear trend if you don't see that little spike back up to test the high. And it didn't even get anywhere near it. It just doji, break. And we got a full-on measured move below the key support line here. I was thinking of being bullish at this point, but then once this broke below, I was like, heck no. And let me stretch my chart out. I love to draw these boxes all over my chart. And this is a weekly chart. I'll draw it on here too. But, when you start to see a primary move and you see some accumulation, I always draw these and just take it below the accumulation. We still have room to run down. This thing can hit $2. This whole thing with, Lulu taking a clothing design for their Peloton line to partner with that. Okay. All I have to know is there's price action here, and I was just talking about this morning. You either get half or whole measured moves, and this is exactly about a half measured move for that expected move. And then look, shorter term time frame. Here's your daily, plain. One move gives an equal move after accumulation and break. Pretty typical repeating cycle. Let me pull this down on a 2-hour, and I blew it up too big. Now I've got really nasty bearishness. It retraced with this wick, and that was that Lulu news. Spiked exactly to that consolidation high and then broke over. I think we could probably continue to short this, but I'm going to wait until it breaks this range and see if we can finish this move. If it doesn't, well, we can be bulls. We can go melt up slowly from here. Who knows? This is one of those companies. They've got, I almost kind of compare them to how Tesla does business. They sell a product with a medium or smallish kind of margin on the sale of the actual product, but then they make their money selling services, add-ons and upgrades and this and that. And that's kind of their model. It kind of takes right after Elon Musk's heart in a way. But in my honest opinion, I prefer to go out and ride my bike outdoors and enjoy the bike ride. I've got time to do that once in a while, but the average user, they've got, an hour to exercise hard and they can't leave their house because they got, kids to mind or whatever they got to deal with. I understand working out at home. I really do. But when it comes to a one product where you continue to try to push services on it, there'll be a point where the demand and the supply kind of meet somewhere. And we're kind of there now. So it could be interesting in the near future. Maybe they'll come out with a brand new product that blows the minds of everybody and do something else with it and sell some services on it and spike it back up. But in the meantime, it doesn't hold my interest anymore because it broke critical support. I had my hopes up for a moment there, but now we're in, I hope the investors got out. I know Jim at one point back when I was shorting this thing, he was talking about it a little bit, and for a couple of times he pumped it. And I used to have a couple price targets on my chart from it that he mentioned, but I don't know. I just don't pay much attention to the stock anyway. So now it's just that's been done. Let's move on to the next thing. He mentioned Costco. We can get into that a little
Yeah,
bit.
he mentioned that one yesterday too. We ended up shorting that one in SJIM.
Let me pull up the weekly on this. So it made a pretty nice bull move here, and it hit right into a liquidity zone that I marked out in shorter time frame. You can see it here. Costco's been around forever. They know how to make money. Here's a point where I would be considering what's next. And then, you get it pumped like this. This looks like a topping pattern. I mean, you start drilling down into the shorter and shorter time frames. Your daily chart here, and that's where I've got this little liquidity zone.
Yeah, to me it looks a lot like a double top.
It certainly does. And it's got a great potential to run right back to support. Maybe say 550 or so would be a good short target for short term. Maybe it'll come back and revisit this devil here. I'm going to stretch that out now because it marks just a liquidity zone. I always mark these wicks. For some reason, it was skewed a little bit. I have a bad habit of dragging these around my chart because I forget to lock them. That'd be a great secondary target, I think. 525, 530 be pretty sweet. If this double top breaks over and does what it usually would do, yeah, great short. I might wait a couple more days myself, but I think it's good enough to take advantage of that really quick parabolic move. And usually, like we just saw with GameStop there, where they get that big spike and then right back down. This is one of those days, and it's kind of settling in the middle of our expected liquidity zone. So another thing I wanted to point out, this is kind of a common pattern too. I've heard many previous, well, not many, but there's been a few moderators with the bullish bears where we've always kind of kept an eye on. Whoops, I marked it wrong. This type of pattern here, when we get the megaphone pattern.
Okay.
And these do two things. It gives you divergence here where you got range expansion. It gets bigger and bigger and bigger. Well, we always split the middle. And I got a few minutes to draw today anyway because we're moving pretty fast. But I look for that as just a basic targeting system. And then you can add divisions to it as well. You can start splitting all that down. And the typical move here when it's a descending megaphone pattern at the top of an existing trend is return to center. So if we can't get out of this liquidity zone here, we can likely hit first target here, about 562-ish. If we get to second target, the middle line is usually where I stop on a short after something like this, about 554, 555. If it continues lower, if I got short at the top of this thing, I can just sit there and take the ride until I start to see a reversal. But if it goes and starts slamming these lower levels, and typically the megaphone pattern will give you 3 tests. So we've got 3 on top. That's the likelihood. If it breaks out of this zone, you end up with a couple of other things that can happen. Now, when they're like this and they're at the top of a trend, they're more likely to make bearish retracement than they are to make bullish retracement. But when they do reach the extreme, sometimes you'll get basically a measured move out of this. So you can go and typically see if, worst case scenario, if you're short and you start to see it break that zone, just kind of draw the box here. It usually makes a quick measured move outside and then breaks over again. If it broke out of the bottom, same thing. You get a quick measured move from here to here outside the box, and then they break back in. I was just showing people that on SPY this morning. And it was on my 5-second chart. In fact, let me pull that up real quick. Whoops. I'm going to pull it up on a 30-second because all my data is going to be washed. Pretty typical stuff. So this was the beginning of that expansion pattern. Same kind of thing, only this one's at the bottom of a trend, but you get a quick break, measured move, comes right back in, goes to center. Pretty typical. It's a very easy pattern to trade. Um, you can usually spot the moves on it pretty good. Here, look at this massive 1-for-1 bullish move right to target. But at any rate, you start to understand price action really well, and you get into these things. And here's another one here. So this is descending down here. Worst case scenario for bears is on that third attempt. It does exactly this. Pops right out of the top of it and then breaks back down in the middle. So it can be a quick panic button trade for a lot of people when they get into a position on that, especially if they're putting size on it. And that's usually what causes that to reverse. It's just everybody's, oh my gosh, I'm short, I got to cover, boom, blast out, and then all of a sudden, guess who's there? Guys like us who read this stuff are there to just take the other side of that trade and ride it, because it's usually a very quick, volatile move. So kind of a great example for today to take that into effect on something like that. So I love price action. It's my bread and butter, and that's just a great way to tell the story and show you kind of what to expect is possible on that type of thing. Love that stuff. And Costco, I love Costco to death. Great company. I mean, I've been shopping there for many, many years. I get, I got 4 kids at home, so that's it's worth it for me to shop in bulk. It really is.
I just ordered from Costco this morning. It just came right before we did this through Instacart.
Nice. Gotta love it. And Instacart, I'd love to look at that in a few minutes if we got time. Maybe.
Yeah.
I was gonna quickly look through Emerson, and the last thing he mentioned was GE Healthcare, but we got time for that. Maybe let's have a look.
GE Healthcare actually came off the bottom. Wow, stopped going down.
Yeah, for once.
Good for you, Jim.
Got one. Emerson, I've told you about this before the broadcast, and I've worked on electronics before. When I was in my late teen years, I worked for my aunt and uncle in a TV and stereo repair shop. Actually, we used to do home service too. We'd go and pick up the big, rear projection, big screen TVs and bring them to the shop, fix them up if we had to, and then bring them back. I've been inside the Kardashians' house to pick up a TV when the OJ trial was still going on. So yeah. Long story short, I worked on a lot of electronics, and I learned a lot about them internally, and I've never been impressed with Emerson. I mean, I don't want to be throwing shade at the company, but, I've never really liked them, and that looks like one hell of a big topping pattern. So now you got Jim mentioning it, and I think he was a little bit more bearish biased on it, if I'm not mistaken. No, actually, he said Deutsche Bank called out a catalyst call and says buy idea. Wow. I've never been a huge fan of Deutsche Bank. In fact, for a while.
No, I'm usually not a fan of their research. I did actually just buy one of their companies they came out with today, but that is rare that I would buy something based on Deutsche.
Yeah, I'm with you. I mean, it's like I watched the whole unraveling of 2008, 2009, and Deutsche Bank took a lot of fire for all that stuff. But long story short, whenever they've made a bullish claim like that on something, I've almost always seen a quick liquidity grab out of it to go short. And man, that's certainly on the books today. But look at this. This thing's choppy and nasty. We got more or less a 1-for-1. I've got some old stuff on it. I've traded it a few times, but I've never really been all that interested in it except for a short. I traded the second half of this move down, and then I ignored this thing for too long. This I drew this morning, and I was looking at this. It can go 2 ways from here. So here's about the midpoint between, you got your A and B moves here. If it rejects here one more time, this thing is going to likely come and test about the top of this gap here. And this is just angular. So watch for a quick push. Maybe it'll touch 98 bucks. And if it does, I'd love to see that thing get rejected and just hammer down for a great short. Drilling into the 2-hour chart, it makes sense to me. This is just a little descending channel. It usually does exactly that. They'll come up and grab half of that channel and then break over. But look at this. That was a huge little news pop in the after hours. My goodness. What the heck happened there? Well, it doesn't print on a daily chart. There's no earnings or anything that announced it. It's probably just a news pop. But look how
Or a
fast,
fat finger.
right? Somebody did something dumb here. So I kind of ignore that because the chart still says descending channel, but I don't think it'll hit those levels really anytime. But just kind of take a note of it, because if things happen that are explosive, and we've certainly seen this thing do some crazy stuff, dude. Yikes. Um, you start looking at this like, am I really interested in shorting it if it can do stuff like this? It can gap up overnight. Imagine being short and having this hammer up, and just you probably have a pit in your stomach the moment you saw that.
Oh yeah.
you know,
But then you probably look and see it was 100 shares and
right? And you're like,
go
oh,
back to bed.
I've had that, and I've seen people like try to paint the tape with like one or two shares, being kind of silly in the after hours, and then watch this sort of stuff happen. There's no volume there to short, unfortunately, or you'd be doing very well, but
Yeah, I doubt this is a stock that trades after hours too much.
not much. But someone probably just really wanted to share the company or something, and said, okay, well, the ask was probably way the hell up here, so they bought from the ask and then got burnt. But the fact that it can gap like that though and be weird is just, it takes a little bit of my interest away from wanting to trade that. That's all. So be careful if you're going to try and mess with that one. It's just one of those companies, one of those stocks that's it just gaps out of nowhere. Moving on. They were also talking GE Health, GEHC. And this is one we're throwing him a bone here. Nice move. Plain to see, clean, measured move off the bottom here on a 2-hour chart. Let's look a little further left. I've left this chart untouched because I haven't traded it, and I wanted to draw on that with you.
I mean, it looks overextended now to me. I mean, the time to buy it would have been a couple days ago.
For sure. Got a nice measure move up. We're kind of trending here a little bit, but if we can't break this previous high, that's very
Well,
well.
and also you have the 50-day, which isn't on your chart right there. I could see it bang into the 50-day
Right.
and come back down.
Just getting the rip, but that old familiar pattern is right there. It's a little bit different of a starting point, but you can see we've made, if you want me to draw the middle line, I will. I messed that up. There we go. Close enough. Just about a measured move split out of this thing, from middle to high. So this is where we love to see this maybe give us a couple ripples and possibly be a good short. But in the long run, can it retrace this whole move? It's not as likely. I think we're going to probably stop here and maybe give us a short. Why? I look left and I see the previous bull trend. All the control areas, if you're watching my cursor, they kind of make sense to do exactly that. So if we break over, we'll eat this entire trend and run it right back down. And guess what? It hits the bottom of our channel. So I might be watching this for a short in a few days, maybe even a week.
Yeah.
But it's certainly interesting. It made a bull move. Cool. Didn't catch a bull move. I can catch the other side of that. I'll be watching right around here. Good point to see it. I might even go so far as to say, okay, that's a liquidity area of interest. Let's see what it does when it gets there, and if it does the right thing, we'll take a trade on it. If it doesn't, we don't have to trade it. It's not what you trade; it's how you trade it, or whether or not you do trade it. Oh yeah, what was that last thing we were going to talk about?
Oh, Instacart.
Yes.
What's the symbol? I don't even know.
Is it CART? C-A-R-T? But it's a different. It was launched from
No,
a parent
cart is
company.
Maple Bear.
Maple Bear. That's right.
Oh, all right. So it is CART. Okay. Yeah,
Comes
I
up.
mean about right. Big
That's,
pop on the IPO and right back down.
yep. When I look it up, I have to go and select between like a few different things, and I looked at something bear. I remember, like, there it is. Yeah, this is man, that's nasty. But we've kind of done something interesting here. We had basically a short squeeze here, and we've come right up to a known resistance area. We can start making some drawings on this thing, which is a good thing. We get some areas of interest, and we can say, okay, well, this is a break it or make it line, make it or break it line. And if it breaks that, we just look for the previous high for targets. So if we start retracing this, cool, we can be bulls. looks like capitalization is nearly complete here. The old story goes, a lot of people get long into the company while it's still private. They get into pre-IPO prices, and typically it'll stew for a few years in the startup phase, and they'll do forward splits on that. So those investors, they're holding shares sometimes as low as like 10 cents a share, and it opens up at 42.95. Hell yes, you're going to sell your position. So, you go and you see this stuff. It's just capitalization from people who got long on the startup. Now it's starting to fade down a little bit. Maybe it's starting to settle. It'll be interesting soon. I remember like when Uber came out, same kind of deal. Did exactly this. It was a great short for a little while, and then all of a sudden it just sort of curled up. This is that area where we're gonna start looking for interest in this thing, and we'll start to see it. Decent price action for scalping in the meantime, though. I mean, it's pretty reasonable to trade that equity wise, but I don't want to mess with options in this thing yet. I'm not even sure if it is optionable yet. But I'm looking at it. I'm just like, well, if we get some interest in this area, we start to go into a trend, maybe we can start considering some long-term stuff in it. But until then, I do nothing but wait. Whoops. I keep forgetting this is an IPO, and if I jump into anything longer than a 30-minute chart, I'm going to miss everything.
Yeah, no, you're not. Yeah, my daily chart doesn't look that interesting.
No, for sure. So certainly we can touch grass up here, at the plateau, and maybe touch that today. It's possible, but I'm going to wait and see what happens with this shakeout until we get into some interesting parts. But I'm also going to mark an area of interest at the bottom, and I'm going to take probably this little wick here and see if we can hold in this range and maybe start to break out bullish. Cool. I'll start taking some interest in it. Until then, I'm probably not even going to trade it. But certainly a company to kind of keep your eyes on.
Yep, totally.
Oh, well, I guess we got finished with the Cramer's list pretty quick there. This is starting to become a smooth routine for us, huh? What else we got to talk about? Anything interesting on your end?
No, he didn't really say much of interest on Mad Money last night. He's been a little sparse lately with the big calls. So,
yeah, I mean, looking at market conditions, it's kind of a wait and see type of moment anyway. I mean, looking at SPY, it's just kind of, it's kind of wiggling around down here. Actually, it just broke its shoulder line. Cool. We went right to that area we predicted. So I think he's kind of on a holding pattern. I think he's going to be sitting there hovering over it, kind of looking down to see what pops up. And maybe he'll start making some bull calls pretty soon here, and we'll see if we can pick off some more shorts, In the meantime, I kind of wanted to get into a little bio. I mean, if you want to tell the audience a little bit about yourself, where you come from, and kind of what brought you to bring these. Well, I already know what brought you to bring the ETFs together, but kind of the process of stuff like that. It's really interesting to me. How does one make an ETF?
Well, yeah. So, a lot there. So, my bio. I used to be. I've been on Wall Street in one way, shape, or form since '91. Worked for some brokerage firms, some insurance companies. Really was not enamored with what passed for investment advice. Figured the only way to do it right is do it myself. Set up a financial advisory practice. Had other financial advisors ask if I could manage money for them, which we did. So we set up a money management shop. Started doing ETFs and things, and then started noticing stuff that just pissed me off. Like, the media trotting out Cathie Wood as the next Warren Buffett, which she's not. So we had to take the other side of that. Jim coming on and, hey, we're going to get Jim's take, treated with deference, had to take the other side of that. My latest project is the other side of ESG. So, we're doing a lot of stuff there.
Right.
Getting an ETF out, it's, coming up with an idea that's viable. Having a lawyer drop a prospectus, file it with the SEC. SEC's got 75 days to look at it. In the case of my ETFs, they usually take a lot longer than that because we do some weird stuff.
Right.
And once the SEC is done, you go ahead and you launch. It's not, I mean, when you've done, I mean, I've probably been involved in the launch of, I mean, could be 50 ETFs at this point. So, I mean, I could do it with my eyes closed. It's not that hard to process. The hard process is getting assets in.
Right.
It is a marketplace that's dominated by BlackRock, State Street, and Vanguard, who are also the guys dominating ESG. Go figure. Um, so you've got to come up with ways to do stuff that's a little bit different.
Of course. And with your management experience, I mean, it needs to look like to me. I'm not trying to give a bias or anything, but managed very well. I mean, yeah, you get some spikes once you get interest coming in, of course, and then you get a drawback to reality. But we're
And
looking at
in LJIM, we got rid of. So now it's just
oh,
the SJIM. Yeah, the LJIM I put out there thinking, Jim and I could have a dialogue and we'd have the numbers right there. And once I realized, you know what, they're never going to talk about this. And there are
right,
reasons why. And I mean, and I know what those reasons are. They're scared and rightfully so. So we got rid of the LJIM and now we just have the SJIM.
and in spite of it, though, I was mentioning like towards the end there, it was actually bullish. It was being managed very well in
Yeah,
spite
I
of
mean, Jim, he, to his credit, he was on the Magnificent Seven before Nvidia's earnings in June,
right.
and there was a 2 month run there where he was kicking butt. Now that's gone by the wayside, and SJIM is doing very well.
Right, absolutely. I mean, this is setting up for a big old bullish measured move here. Once it gets through
Yeah.
resistance, just chart analysis style or wise, it's looking bullish to me. Um, and that's the whole thing. I mean, you're picking off exactly what I do. Just in my own portfolio, I just go and I look at stuff that he's paying attention to, and I just analyze the chart and make a good decision on it. Go with what the chart tells me. And
There you go.
like I said, he puts interest on it. Lots of people follow him. Lots of people are looking at it. And when there's interest in an equity, guess what? There's volume and lots of volatility. I love volatility. Volatility's been paying my bills. Um,
I love volatility, and right now I'm short volatility, so that's paying my bills at the moment.
there you go. And that's another thing. I mean, this market has been pretty nutty. It went from what was it, 12 or I don't even remember how many years long of QE fuel, bullishness, melt up. And then that bear market, I mean, that took a lot of people out, man. I mean, there's a lot of retail that just got absolutely hammered in that stuff. And, you know,
Yep.
for guys like us, it's been a great opportunity to show people how to survive a market like that. And then above that, show people how to profit from a market like that. I always say, equities tend to take the stairs up and the window down. And man, being a bear, when you get good at trading bearish, it's you end up a little biased by it sometimes. You got to discipline yourself to just trade what's in front of you. But when you realize that it comes down really stinking fast, you can make a lot of money really stinking fast. And
I tell people you got to be agnostic between long and short, but the legendary Gil Morales tells people once you start getting piggy on the short side, it's usually time to cover.
yep, absolutely. Once you start seeing that little green-eyed monster start to stare back at you in the mirror, definitely take that discipline to heart because it comes down to price action hands down. And when a chart's telling you, hey, that I've been short, I've made leaps and bounds as far as distance and price action here. I think I can be happy with taking a profit here, and that's the key word there. Trade
Exactly.
when you're happy. Take your profit when you've had a happy move, and that is going to serve you well. Just you don't have to be so greedy and shooting for the moon. Just take the scalps and those little base hits. If you want to call them that. Sometimes they're much more than base hits. They add up over time. And nickel and dime your portfolio to the green side is. You look back on it and like, wow, I can look back on mine and say, yeah, I've outperformed the S&P definitely, very very much so. And if you can at least do that with these little base hits, and you start building the discipline and being able to trade effectively and profitably, dude, it just kind of grows with you, and you're a man after my own heart. You got tired of seeing all the crap come out in the media and just basically sucking retail in with the little experience, and everybody and their mother was profiting from it on Wall Street. It's time we've had enough. We're going to start staring in their face and be like, hey, look, guys, we're all in this to trade together. We all. The rising tide raises all boats, but we can all be boats. We don't all have to just try to sink each other either. So
there you go. Hey, I got a call coming up any minute, so I'm going to have to hop.
Absolutely. Thanks for joining me again.
I will. What's that?
Thanks for joining me again. I really appreciate you. I'm going to respect your time and let you go. Have a great day, and thanks for joining us, everybody.
Next week.
We'll see you next week.